GM. GM. Monday, 16th of September. Let's go. Daily levels. So, yesterday on Weekly Outlook, I mentioned the bullish and bearish paths. And the bearish path is starting to play out already. So we've lost the value area low. We are right back at the bands. And we are right near the pivot, which is here, this 2021 pivot, which I should actually change the color of that to a black line. And until like I mentioned yesterday, if it goes down through this level, I think that's when we see a further unwind. And a couple of things. 3 red days in a row, very bearish if it continues. So I think it's very, very important for bulls to defend this level, that we don't go any lower than this. If it's going to go higher, it should really, bottom should already be in for today and probably for this week. If not, if we make a new low beyond today's low, I think that's it. We're going at least to 56.5 down here, and probably to new lows over the coming days. So I'll be watching this very closely. There is a small chance that we could come down and we could just sweep that and then reverse and rally. That's possible, but honestly, I feel like if it comes to this area here, that's what it's going to do. It's going to head significantly lower, because at that point, like I said, when you zoom it back out, at that point, we failed. We had an impulse Friday, clearing out the shorts. 2 days over the weekend, looks like everyone was getting fucking long again, FOMOing. Bands did not go green. We got above the 50, but we're back below it. We're losing the value area again. So after today's low gets broken, I see pretty decent potential for unwind right back down towards the lows, as the bounces keep getting less and less impactful. What can stop that? Obviously, it would be any kind of reversal today that holds us above this level. But really, it's just a continuation of how the market has been for the last several weeks. It's weak. And bounces are getting sold into, and the rallies are failing. And you know what's actually, it's actually very similar to this move over here. This pump into the highs back in May. Immediate sell-off, just bleed, no demand. Consolidated, chopped around for a bit, and then we went lower. It's quite interesting. Impulse candles, I mentioned them a million times before, but when you get these impulse candles that move up through a range and then they get invalidated, so I have to go back over here and look at the 4-hour. You can see here, impulse candle that gets filled in is generally a sign of weakness. Now, I think the market can continue to hold here. I don't think it's in the worst position ever. We're still above the pivot, which is important, but you really want to see, you need to see the market trying its best to hold on here, and grinding up through the range slowly is not a bad thing. That's why I don't see anything to be bearish about here just yet, just to be really clear. There isn't a structure break. You know, that's why if it follows this path, if we go lower, and you see this kind of move here, that's where I think we go down from. But it would have to break down further. It's not in a position where I would be overly concerned. It's more about, at the moment, it's doing this kind of pumps up, retraces the whole thing, builds back into it, pumps up, retraces the whole thing, builds back into it, which is completely fine. I mean, that's the way the market should move in many instances, because we're quite a bearish market. It's overly, I wouldn't say it's oversold, because we're sort of just sideways, but it's overly, I would say, bearish biased, I would guess, on the low time frames, which means nobody really wants to get long, and then so all of a sudden shorts get squeezed out and impulse is very fast. Then longs chase in and then they get chopped. And then again, shorts get blown out and then longs chase in and they get chopped. So as long as it keeps moving upwards with some kind of a bullish structure, then it's not a massive concern to me. But overall, it's now looking like this resistance is holding. So if I go to separate chart, take some of this off here. This breakdown level and the gap that was left behind, this kind of resistance that we've seen, is where the market is holding at again. So if you saw continued weakness around this area here and the market's unable to make it above that, that's a really clear bearish sign, right? The market should not find strong resistance at these areas again. Now, if that's the first touch and it drops back and we hold here and we consolidate and we move through, all good. No problems then. But looking at it, I think that, you know, the biggest moves probably ahead of us this week. Rate cuts on Wednesday. We'll have a better idea of what's happening beyond that. And it's simple to me. It's really simple. No bearish moves yet, or no bearish trades yet, no shorts yet, because it's still at an area where plenty of room it can go higher. We can have a rally post rate cut. It's actually better, in my mind, it's better to not be pumping into the rate cut, because that would create more of a potential for sell the news. But all this changes very quickly. If we go below this pivot, if we go below 58k, I think that that's really, really, really where you're looking at deeper sell-off to come. Because at this point, then the bounces are getting significantly weaker. You just look at like what has Bitcoin done when it came to this area. Last time it came to this kind of 53, 54 area, we got a rally all the way up to 70. Then we had the dip lower. We had to go down as low as 49, could only rally to 64. We come back to that exact same 53, and we're only able to bounce to 60. So far, obviously doesn't mean this move's done yet. But if you see, that's why if you see the market come back down, and that's why I'm saying if this structure breaks, if we go to 57, 56, it's most likely going to go for new lows at that point, I would say. And at least to revisit the lows themselves. But, you know, at that point you just say this is just bearish. It's quite simple. There's plenty of opportunity for this to be a bullish reclaim and, you know, sweep the lows, retest, hold, and sort of just grind its way through the range. But I also see, like, from Thursday, Friday, and then over the weekend, just mass bullish posting all over again from everyone from, like, the macro type of long-term traders to the meme coin degenerates. I think the expectation is that, you know, I just think there's much more potential for this continued chop and failed rallies and then the bounce and then it fails again, then the bounce. Just to like grind down morale almost. The market will continue to chop until people just start to give up on it properly. Which sentiment-wise I don't see. There's still a lot of expectation that this is, you know, Q4 has to be bullish and up only for October and blah blah blah, which might happen, but maybe we just keep making new lows until then, right? Makes a new low beyond here, that'll take another set of people out. Makes a new low beyond there, that'll take another set of people out, and all of that can happen, you know, before we even get into October, and then you're into October and. Maybe at that point, because you'll have people give up there and people give up there, maybe at that point we can have a proper rally. But, I mean, for the prospects of bull market, you really don't want to see Bitcoin continuing to make new lows. It's literally the opposite of what you would need to see. So, I don't know. At some point, some demand needs to come in here. And to be honest, that was a pretty... If that's all the bounce was, it's just more of an indication of a bearish market, to be honest. And there might just be something underlying that has to break first. But anyway, finishing up here. Where is my... Right, let me get rid of some of this. Because the path and the plan, so I was talking about when I would buy BTC again. So I mentioned this before the weekend. If we took out those highs, we'd come back, we hold this area. We didn't take out the highs, we came back. We're holding kind of at that breakout gap has been filled and retested. There's a flat daily candle below, which is worth watching. But if we spend the rest of this week kind of in this consolidation area here, it's not too bad. But we drag this across, we've got our volume profile for everything from the top right to where we are today. So you got your new value area, which is constantly moving, and we have the EMAs here. And so for me, it's really simple. Back inside the value area, back above the 50 EMA, and when the bands go green, that's the time to get long. The good thing about this is if we get back inside there after having touched it and tried to lose it and then get them, especially if it's a relatively quick reclaim, that's a pretty good sign. Because usually when we lose these levels, right, when we got above the 50 EMA over here and we didn't lose it at all, and as soon as we lost it, that was it, straight to new lows. Got above the 50 EMA here for the first time, no closes above it, no closes, no closes, no closes. First time we close above it, as soon as we close back below it, unwinds all the way back down. So if we see anything different, if we don't see an unwind here, that's a good sign. But unwind is definitely on the table. How did stocks open? Stocks opened bullish. So Bitcoin, Bitcoin finished Friday at 60K and bleeding Saturday, bleeding Sunday, and dumping down early Monday. Well, it's definitely not because of stocks. Dollar keeps weakening, so it's not because of the dollar. Gold remains strong. So Bitcoin's moving it's kind of moving on its own here, which is quite interesting. We'll see what comes next. Trade of the day, I'm going to break that down. I'm going to break down the collapse potential, how to trade it, and the recovery potential. GM.